I'm so glad that you could join me today. For everyone watching this video, I am Kimberly Whiter, CEO of Elder Care Solutions, and we help clients that are either caring or aging and hitting up against some of that financial strain that comes with elder care. And I came across Dawn, one of our new close friends, because of your work in housing wealth, which is incredible. So Dawn, I'd like for you to introduce yourself and share your amazing work.
So thank you, Kimberly. It's a joy to be here. I'm Don Graves. I am a reverse mortgage specialist for the last 22 years. And in that time, I've helped nearly 3,000 folks understand the role that housing wealth can play in sustainable retirement outcomes, particularly when it comes to creating a long-term care plan for our aging parents.
Yeah, and for so many of the clients that we work with, your work is so applicable. So I felt it was very important to have you come on, and we have a kindred spirit when it comes to education and really talk about the reverse mortgage, because there's a lot that goes around what people think about this, and we want to kind of like bust some of those myths. And so we'll start, Don. What is a reverse mortgage?
4 words, Kimberly, 4 words that if your listeners or viewers, if they would just write down the letters IJAM, IJAM, it's just a mortgage. It's just a mortgage. The reverse mortgage is a loan for retirees age 62 or better, though there are some programs now for age 55 that allows them to borrow money, just like a regular mortgage or home equity loan, without having to make monthly loan payments. They don't give up ownership or come off title to the home, and they'll never be required to repay more than the home is worth. So it's just the home equity loan. It's just the mortgage that allows them to borrow this money. Now, I have a short video that sometimes I like to play to describe this. May we share that now? I think seeing sometimes is better than listening.
I think that's a great idea.
All right. Could you share your screen with me? So 4 words, folks, it's just a mortgage. A few years ago, the reverse mortgage industry, there was a focus group that was convened, and they asked folks in retirement, what type of loan would you be more likely to get? A 30-year mortgage, a home equity loan, home equity line of credit, or reverse mortgage? And nobody said reverse mortgages. And then they changed the question, brought in another group, and I want to share with you what that second group said. I'm going to play 2 minutes, but here's what I want you to listen for. What stands out to you as you hear what they said? Let me play it.
Welcome. Come on in, have a seat.
We invited real homeowners to participate in a blind challenge comparing 2 home equity line of credit products, a traditional home equity line of credit and a reverse mortgage line of credit. We call this the Home Equity Line of Credit Challenge. Our groups learned that while both products let you tap into the equity in your home to help you fund your retirement, there are some important differences. They discovered that there are options for how and when to repay the loans, that monthly payments and available funds can change over time, and that only one of the products is government insured. Finally, we asked them to choose which product they preferred.
B almost sounds too good to be true.
That's a no-brainer. So I'm going to reveal now what these products are. Product A is a traditional home equity line of credit. But the product you overwhelmingly chose is a reverse mortgage line of credit. Does that surprise you? It sounds like it does.
I wish I had known about this before I had taken out the home equity line of credit.
It's a mortgage or it's a line of credit, but with flexibility, I haven't heard yet any reason why I shouldn't pick this product. You're in a better position with the reverse mortgage.
So the fact that it's a reverse mortgage line of credit, how much do you know about reverse mortgages?
My view was very negative.
Well, this cleared up a lot for me.
I feel a little more informed about the reverse mortgage than I did when I first walked in the door.
I don't think I ever for some reason fully understood that a reverse mortgage was in fact a line of credit.
I would consider the reverse mortgage, now that I've heard more about it.
85 out of 88 people who took the Home Equity Line of Credit Challenge chose a reverse mortgage line of credit. Take the challenge for yourself and find out if a reverse mortgage line of credit is right for you.
Kimberly, that is just one of my favorites. Now, I know you've seen that before, but seeing it afresh, what stood out to you about what those people said?
Yeah, just that their education was not at a level where they understood what a reverse mortgage was, which was creating a lot of fear in them.
Mhm.
And I think it's such a powerful video to watch. And I think a lot of people relate to it because they also are a little scared of the reverse mortgage. Like it's very spooky to them, right?
Mhm. Absolutely.
Yeah.
Absolutely. And so that's a reverse mortgage.
Hmm.
And the most popular kind has been around since 1988 under the auspices of the Federal Housing Administration. The oldest reverse mortgage is older than Medicare, 1961 in the United States. So it enjoys the full faith and confidence of the United States government. It's a powerful tool. I hope many clients and children avail themselves to this for their aging parents.
Right. And I still will bring it up to clients, and there's always hesitation, always like, oh, I don't know. And one of the things that is a very often comeback with my clients is, well, doesn't that mean we no longer own the home? So I think it's good for us to spend a little bit of time kind of busting some of the misconceptions around the reverse mortgage. So what are the things that people often think about the reverse mortgage that just simply aren't true?
I want to go back, if you'll allow me, to that slide where we talked about the basics. Can I go back there?
You sure can.
Let me do that.
Mhm.
And I want to share some things that answers that question. There's the music ending. So let's go back here. So what is a reverse mortgage? It's just a mortgage, folks. It's just a mortgage. When we look on the screen, there's a traditional home equity line of credit and a reverse mortgage line of credit, and you'll see some significant differences. I'll unpack those in a moment, but I want to get to Kimberly's main question. When we talk about reverse mortgages, there are four types of reverse mortgages. There's the private or proprietary reverse mortgages, 1961, the home equity conversion mortgage. Sometimes you hear the name Kimberly HECM, HECM. That's the federal government's sponsorship of the program, 1988. They're the jumbo reverse mortgages, and then there's a reverse for purchase. So there are different types of reverse mortgages. They were developed because we're living longer. The house was a major asset, but the only way to get money out of the house was to borrow against it and make a payment or sell and move. So a reverse mortgage is a non-recourse loan for those aged 62, in some cases 55 or better, and allows the client to convert a portion of their home's value, turn it into tax-free dollars without having to make a monthly payment, without giving up ownership or coming off title. That's one of those big misconceptions. Oh, that's the loan where the bank loans you money. When you die, they take the house. No, ma'am. Remember, IJAM. It's just a mortgage. We don't take the house. We don't own the house. It's just a mortgage, and you'll never be required to repay more than the home is worth. Now, a reverse mortgage must be a first mortgage, and we'll talk about in another section how much money we get. But I want to talk about the common misconceptions because and you're right. I mean, if you mention reverse mortgage at the barbecue or the family reunion, you know what happens? Three people get up and leave the table. And if you're not careful, your Uncle Junebug made a shank out of a plastic knife and fork, and he'll come after you. And so it could just be dangerous mentioning it. And sometimes the story, Kimberly, is, well, I was at the family reunion and my Uncle Junebug came out of my cousin Tracy's spare bedroom. And we said, Uncle Junebug, do you live in there? He said, I do now. And everybody said, why? What happened? He says, well, I got a reverse mortgage and I lost my house. And everybody just reacts. I knew it. I knew those things were terrible. And next thing you know, the next day they go to their jobs and they go to the church and they go to the neighborhood and they say, my Uncle Junebug got a reverse mortgage. He lost his house. And you know what, Kimberly? He told the truth. He did get a reverse mortgage and he did lose his house, but not for the reasons people think. There are four requirements of a reverse mortgage. Number one, if you get one, you got to live in the property, at least one of the spouses, as your primary residence. Number two, you got to maintain the property. Number three, you got to pay your property related taxes. Number four, you have to keep insurance in force on the property. Now, Uncle Junebug didn't do one of these things. Kimberly, which one of these don't you think he did?
He probably moved out of the house.
Well, before that happened, he hadn't paid his taxes.
Mm,
Number one reason
yeah.
that show up in the newspaper and with the reverse mortgages, they didn't pay their taxes.
Yeah.
So
Right.
some of the common misconceptions, I could lose my house. No, you do these things you see on the screen, you're not losing your house. And you're doing these anyway.
Mhm.
My children won't inherit the house. Yes, they will, because it's just a mortgage.
It's just a mortgage.
With the regular mortgage, if you die or move, you sell the house, the mortgage is paid off, then the money goes with you if you move, to your children or your state if you die. It's
Mhm.
just a mortgage.
Yeah.
So the bank doesn't own the house, the bank doesn't sell the house, you're not going to lose your house. It's just a mortgage. And once we kind of get the spookiness out of it,
Mhm.
we can begin to have some really fantastic
Yeah.
conversations for the clients and your aging parents.
Right. It can become more productive, and we can actually look at this as a real viable option, right?
Yes, ma'am.
One thing that you have that I treasure so much, and it has already brought some value to my clients, is your Illustrator tool, where we can do a hypothetical and I can grab some numbers from them about their home and the wealth that might be in their house, and we can do an example of what a reverse mortgage would look like for them. And it really gives them fantastic information on, like, am I going to raise my eyebrows at this and say, wow, this is really exciting, or be like, well, maybe it's not the best option for me. But either way, it's an informed decision, which is exactly where we want people
Mhm.
to be. And so as an example of that, I'd love for you to share just like, how does this work? Let's show people.
Sure. Let me share my screen again. I'm
Mhm.
looking for something. You see me looking over here? Oh, here, it's slid up under my desk. My key. I'm going to pull this out, show this to your audience. This is a reverse mortgage. Can you see this? Do you
Yep.
know? Uh-oh, I'll turn that up too low. Have you ever seen this before? Now,
I
I'm from-
use that every time I water my plants.
well, see, my family's from Kentucky, so we used to call this deal a spigot.
Yes.
Now, when I got up here in the north and with the Yankees, they called it a faucet. I said, oh, no, that's not a faucet, that's a spigot. But, imagine, if you would, that people have seen this on the outside of their house. They hook a water hose up to it, or if you're thirsty, you just turn it. But imagine you're visiting your parents, and Mama says, would you go get me some lemonade in the kitchen? And you go to turn the light on, Kimberly, and this is underneath the light switch, this right here. And you say, Mama, there's a spigot underneath the light switch. What's going on? That looks dangerous. He says, oh no, that's special. Be careful. I said, Mama, what's special about it? And he says, well, turn it, but don't turn it too fast. They reach up there, Kimberly, and they just turn it a little bit. And instead of water coming out, you know what came out? Money.
What came out? Money came out.
And the children said, whoa, Mama said, turn it off, turn it off. And they said, Mama, what in the world is that? She said, oh, that is a home equity conversion mortgage. It's a money spigot. I got this thing, I hooked it up to my house, and whenever I want and for whatever I need, I just go in there and just open that thing a little bit, and I turn it back off. See, folks, that really is what a reverse mortgage is. Can you take cash out of your house right now? No, none of us can go home and just reach into the brick and mortar and pull cash out. We can't. We either have to get a mortgage or a home equity loan that turns it into cash, or we sell and move. But with a reverse mortgage, we're able to take the money in the house, we make it visible and liquid, and we control it. So let me share my screen. It's based off of three things. I say make it big enough to write inside. Number one, it's based off the age of the youngest borrower. Number two, it's based off the home's value. Number three, it's based off the expected interest rate. That's a long-term interest rate, and that's going to give us a present number. So in the middle of the triangle, it's going to give us the net benefit amount in the middle of the triangle. If you have a mortgage or home equity loan on the property, that's going to be paid off from whatever's in the middle of the triangle, if you have that, and then there'll be some money left over called a line of credit. That's the basics of a reverse mortgage, that triangle. Now let's take a client here, Kimberly, and let's take a 74-year-old and a $300,000 home.
Yeah.
Now, for your folks who are listening here, remember the triangle we just drew.
Mm-hmm.
74, a $300,000 home, it's going to make available to them $141,000. Now pause right there. I
Mm-hmm.
want you to think about this for a moment. I want you to think that mom and dad are sitting on $141,000 that they can use. Why would mom and dad need $141,000? Kimberly, I want you to answer that. And
Yeah, because there are a lot of long-term care costs that are not covered. And families are spending so much money out of pocket on these care costs that imagine how useful that money could be.
sure, my mom is 89 years of age. She was spending $7,000 per month for part-time home care.
Mm-hmm.
And little lady from Kentucky and migrated to Cincinnati. And it's amazing that she squeezed 2-3 years out of that until we ran out of money.
Right.
And we had to make a decision at the time of this recording. She's been in a memory care facility just about 7.5 months. It's a very tough situation.
Mm-hmm.
Mama didn't own a home. But had she, her home was around $300,000. Now imagine what would have happened if we had access
Right.
to $141,000. What that could have done to keep mama
Sure.
at a place and provide more care.
Yeah.
So there's certainly a long-term care or a solution
Mm-hmm.
there. There's also a reserve fund for not just care, but Don, we need some extra money. There are things that maybe we're not at the place where we need care. Maybe we need home modification.
Yeah.
That we can stay at home.
Well,
So-
and that's under the long-term care umbrella. Long-term care is not the medical care. It's all this other stuff that falls under care, like modifying the home so it's still safe to stay there. It's taking care of all the errands and the medications, and all of that costs money. And families are so surprised by that. And they have care that's covered by Medicare, but they're still wondering, like, why am I dishing out $1,000 a week on other types of things that are not covered? And
Sure.
that's where there's such a financial strain for families that are helping an elderly loved one try to stay home.
That's right.
Mhm.
Absolutely. My sister quit her full-time job to help with mom. I had a niece who was providing caregiving overnight, and it becomes a family affair. And sometimes the caregivers can break down physically as well as financially, loving our aged ones and caring for them. So the ability to say, how are we going to care for our aged ones, our loved ones? Well, the truth is 87% of retirees, seniors, own a home. It's their largest concentration of wealth and oftentimes their biggest asset. Does it make sense to look to the home as a source for care for our loved ones?
Absolutely.
I think it does. So
Yeah.
here's an example, just let me clear this, of what it looks like to have a reverse mortgage line of credit. Again, the triangle: age, value of the home, current interest rate, $141,000. But notice, at age 85 or 84, 10 years later, if they didn't use that money, what's happened? It's grown. Now it's $229,000. Let's go out here to mama's age. My mama, it's $292,000.
Yeah.
And so the ability to convert your home into a reserve fund.
Yeah.
That
This
has
is where the spigot's so important. Really control.
That's
Yeah.
it. You've got a reserve fund that's growing and you can use it.
Mhm.
And I'm sure your listeners can probably list 7, 8, 9, 10 things
Sure.
that having this reserve. Well, Don, do I have to use it? No, you don't have to use it now. This is very important. Someone says, Don, I don't know how a line of credit works. I said, yes, you do. Because if you've got a Visa or MasterCard in your pocketbook, Discover, you understand how a line of credit works. That means Visa or MasterCard says you've got a credit limit of $141,000. But if you didn't use the $141,000 or you didn't use anything of that, you don't owe anything back to Visa, you see? So you're only responsible with the reverse mortgage for repaying, and not you, let me say that, the home is responsible for repaying whatever was borrowed plus the interest that accrues. That's not for this call. That's a longer conversation. But here's the point. Since 1988, please keep that in mind. This is not new. The federal government has been allowing for this to happen.
Mhm.
Our clients and their parents are sitting on an unmonetized, illiquid asset.
Right.
Here's the
That's
question.
largely untapped just because they don't understand a lot around it.
At a minimum, I say, would you want to know how much you have in there?
Sure.
Whether you use it or not,
Mhm.
but you want to know. And that's really what I encourage all people to do. Find out how much housing wealth you're sitting on.
Yeah.
Whether you use it or not, that's going to be a
Right.
family decision. That will come with education and consultation.
Mhm.
But please understand, you're sitting on something that
Mhm.
can make a world of difference to your life.
That's right. Fantastic. Yeah, absolutely. Just know and be empowered by the knowledge, right? For my clients, two of the most important things that I can do to ease them to even start investigating the reverse mortgage is we are not trying to take your home away. This does not, it's just a mortgage, right? You're not going to lose ownership of your home. And keeping in mind that Medicaid is always an option for people somewhere along the care path.
Mhm.
This also does not impact the eligibility for Medicaid. So down the line, should that become something that you as a family decide is the best path forward,
Mhm.
having a reverse mortgage on the home will not have put any penalties on your family. And that's really important for families to think about too.
That's very important to understand and
Mhm.
to enter into with consultation. I really think what we do mostly, and I serve as a national business development manager for a Fortune 400 company that does reverse mortgages. And so, and it's a name everybody would know, but what we do is say, let our team do a 20-minute housing wealth assessment.
Mhm.
We're not trying to sell you anything. If it makes sense, we'll do it. I've had 16,000 of these consults in 22 years, and about 3,000 people became my clients. And all that tells your listener and viewers that as good as reverse mortgages are for many, they're not always the right
Sure.
thing to do. So
Sure.
we don't know if it's right. We like to ask some thought-provoking questions, explain the program, answer whatever questions they may have, and together and with family, talk
Mhm.
about what the most appropriate and strategic next step could be.
Yeah.
That's a powerful concept.
That is a powerful concept. And if you could put some parameters, knowing that, no one boils down to the same situation and all care situations are different, but some great parameters around if this is a really good tactic for you, you generally look like what?
Sure. You're going to be a homeowner, of course, and age 62 plus. Now we can do 55 for higher home values when we start getting into 600,000 plus. We can do a younger age, but let's just stick with the home equity conversion mortgage. That's about 95% of the industry. That's the FHA program. So we're looking for homeowners age 62 or plus that it's your desire to remain in your home for as long as possible.
Mhm.
Typically, you've got about 50% equity in the property. That is, I've got a $300,000 property and I don't have a mortgage or home equity loan that's more than 50%
Yeah.
of that. That's a great starting point.
Sure.
And then economically, does it make sense for you to unlock the equity
Mhm.
in your home? If you had a choice, would you rather your home's equity be liquid or locked, or your loved one's home equity be liquid or locked? And most people say, duh, liquid. I said, me too. I said, now, if it's liquid, would you rather that liquid be growing or stagnant in its availability to you? You say, we're growing. I said, well, that's exactly what the reverse mortgage line of credit can do for you. It's a reserve, it's a backup, it's an insurance plan. Because I promise you, when Mama first started demonstrating a few memory issues that all seniors have, we never thought we'd be $200,000 down the road. Both sisters quit their jobs just to try to make it work, and we fully didn't.
Yeah.
And we don't think that. We don't think that. So to be proactive is a good conversation to have.
Those are fantastic points. And you really did describe a lot of my clients where the parents are in the 70 to 90 age range. They, of course, want to stay home. And that generation of people were really smart about how they paid down their houses. So they do have lots of equity in their house. This is a fantastic solution for a lot of people who are starting to take on the care of their parents or in-laws. So I'm so glad that we were able to shed a little bit more light on it and hopefully help people understand it more for what it really is.
Well, fantastic.
Thank you so much for helping me shed light on this. And thank you for all your amazing work and knowledge on housing wealth and how you are helping families all over. And especially, it's a wonderful technique to tackle the care crisis that we're experiencing in the U.S.
And Kimberly, thank you for what you're doing for not just the aging parents, but for children. Like my sisters and I. My sister's 70, my brother's 69, my other sister's 66, and I'm 56. And we needed a guide. We needed a Yoda from Star Wars to lead us through and to navigate this world. And so thank you for what you do.
Absolutely.